All right. Good morning, good afternoon, and good evening to everyone with respect to your different time zones that you are participating. After a small break, we are back again, and welcome back to the live session. I'm seeing a lot of new members being adding to our family, and it's growing slowly but steadily, and it feels so good with all the reviews that sometimes I receive on the YouTube videos that you're watching. Thank you again, and I'm really humbled by your kind support, all of you. First things first, if you are following Christ, it's His time these days, and wish you all a Merry Christmas, and after a few days, also a wonderful New Year, and a number of years to go ahead after that. All right, so let's begin the first uh, introductory or yes, introductory session on the technical analysis front. Uh, and I would like to take some space off to explain how the flow is going to be like. I'm sure most of you have seen the two videos posted a couple of weeks back. One of them was the basic structure of the wave principle, and the other one was understanding the fractal nature of markets. Okay, that was a bit on the wave principle, on the elite wave principle side. We will resume right from the step one. Right, I know many of you are all aware about all of you mostly would be aware about technical analysis and chart reading, but just to be on the safer side, let's begin with the first step, right? I and the only thing that I'm asking from you is to have faith in me for a few sessions, maybe 1 week or maybe a couple of weeks time. Each session will be for about 30 to 40 minutes, depending on how it's completing or not. Right, I plan to introduce two phases actually. One is the basic four pillars that I love calling this as, and a few elements revolving it. Right, the first that is the first part, and the second part is understanding the wave principle. We are going to spend a number of hours, I repeat, we are going to spend a number of hours discussing both the parts here. We will begin with the first story of the basic four pillars, and it's not just four actually. They are the four is the core actually for the technical analysis part. But there are then few other tuning sessions as well that we will discuss, and along with that we will also touch upon the practical element and the practical side of each session. Please send in your reviews after you may have participated or watched a few videos as to the flow, because I strongly believe in creating a live environment uh, when we are learning. Both of us are learning, okay? I need to just give a couple of disclaimers here. Anything and everything that I'm discussing here is none of my creations. I'll be very honest and straightforward. But I strongly believe that whatever experience or practical experience I would like to say, or the theoretical concepts that with the grace of God I've been fortunate enough to learn and spend time with many thousands of students across India and worldwide. And the kind of delivery that is being done is the only thing I would like to say that you would enjoy. Otherwise, anything that we are discussing here, you can go and find out by simply surfing the net, or n number of websites and companies are offering courses, and you can learn. It's all readily available everywhere. May not be free. What we are doing it here is absolutely free and complimentary, because I strongly believe it's everybody's right. Because I myself went to this phase when I didn't have enough dollars in my pocket to purchase a particular program way back in 2006 7. God's grace, someone else purchased that program, and I used to learn and teach them actually. All right, one session I used to learn and then deliver. Another session I would learn and deliver. Then I could not keep that book because I did not purchase it. So it all was stored in my mind, and I started practicing, and that's a long story. To cut the story short, everybody should have the right to know what's going on in the right manner. The only thing you'll enjoy, I believe, in these sessions is the way it is being delivered. It is the simplicity that you'll find very interesting in the delivery here. All right, very simple language, and very powerful results you will achieve by that. All right, so please have your faith for a few hours to me and on me, and I have a strong record that your faith is going to be converted into belief, and then probably conviction over the period of time. All right, so let's get started with the first story of the basic four pillars, and that is all right. Human psychology and the trading psychology, they both go absolutely parallel to each other. I repeat, human psychology and the trading psychology, or the trader's psychology, they go very parallel to each other. Right. Before I begin, okay, another announcement. Uh, these are your sessions. It is being done for you. All right. So if you are here live or watching the videos, it is going to be very helpful to me if I hear from you. There are different channels you can contact me. You can write an email, or WhatsApp, or YouTube, or anything what you feel comfortable with. Give me feedbacks, because that is very important. These are your sessions. I'm here for you, not for me right now. And I want to continue this until I'm able to do this, right? The way it is being done right now. The other request I would like to make is, if you're liking it, then help spread the word. That's all. Get subscribed and help spread the word. That's going to mean a lot to me, and it is going to be of some benefit to me in future, not right now. So even if I die, this is going to remain here in the YouTube channels for all of you. All right. So let's get started now. The first point that I love discussing in my sessions here is that human psychology is absolutely parallel to the trader's psychology. What it means is, let's say if you are an impulsive kind of a person in real life, right? Impulsive, sometimes you get emotional or angry, or it's like a bubble that comes out of you and then subsides. You understand what I'm trying to say? Impulsiveness, if that is the kind of personality that you're having in real life, whether or not you know this, but subconsciously you will be trading in that similar fashion. I believe many of them already know a lot of technical analysis, more than what I know, but believe me, these small things that I'm discussing here will or can help you a lot, all right? And as I said, just a few hours, and then we'll be doing quite a few technical things here. All right, so if you are a cool and calm person in life, then that will be automatically subconsciously reflected in your trading style as well. You will be in and you'll be staying there for a while with a particular risk and reward ratio in your mind, and small price movements will not be affecting your trading style at all. But an impulsive person in life, yes, you will be in and out and again in and out without you even knowing what are you doing sometimes. All right. So this is going to remain, but the only good thing is that maybe you can reprogram your subconscious mind as well. That's a different point altogether. Neuro linguistic programming. Sometimes we might discuss that as well. But technical analysis is a scientific art which can be learned and implemented by anybody and everybody. The only thing is that you should be having the willingness to learn that. That's all. All right. So let's begin with the first session, and that is understanding the language. Whose language? Your market's language. All right. Just imagine if I were to start talking in, let's say, என் பேர் வந்து ஹர்ஷ் இருக்குது. இப்போ நான் வந்து ஒரு ஃபர்ஸ்ட் செஷன் எடுத்து போகிறேன். அது வந்து லாங்குவேஜ் மார்க்கெட்ஸ் எப்படி பேசுவான் அப்படின்னு நம்ம நினைக்கிறோம். Alright, how did you feel about this? Unless and until you are very conversant with this language, which is called Tamil, one of the regional languages in India, you would not understand anything, and you would say that, okay, I don't think this is my cup of tea here, and I should say goodbye and thank you to Harsh. But the fact is, whatever I spoke was absolutely grammatically correct in a particular language which you did not understand. I was not talking anything which was wrong actually. Okay, this is the same problem which happens when you are trying to understand what markets are telling us and what we are understanding. Precisely, this is what is the best example I can give you what's happening when you are sitting in front of a price screen and you're not understanding what's going on there, because price screen has got nothing to do with any understanding of the markets at all. Okay, even if you are watching charts and if you don't know the language properly, it's more or less not watching anything at all. And once you begin to understand the language that is spoken by the markets, which is chart language. Many of them don't understand clearly what it means actually. But once you start doing it, or once you start having the feel of that language, believe it or not, wonderful and amazing stories they start coming out from the charts through your eyes, and you start understanding what the markets is saying. The markets are very truthful in nature, they never lie. The only thing is that we misinterpret sometimes. Then that's fine, that's okay. Nobody on this planet Earth would understand 100% of the time what the charts are saying. But even if you understand a few percentage of time and I can make out a probable case out of it, you're fine. Okay. So let's understand and let's talk, spend some time today as to how uh, markets communicate to us. And the problem is that this communication is not two ways. This is another major point you need to understand. It's not two ways communication, it is only one way communication. I repeat, sir, it is only a one way communication. What this means is this: the markets will talk to you in a language called charts. If you understand that properly, you need to simply implement There'll be something which is saying you to buy the markets, simply go out and buy it. If you see something which is proving that you should go and sell that, please go and do that. There's something which says, okay, don't do anything, it's absolutely flat, then be flat. One of the biggest mistake the traders make is that I think a particular instrument, let's say Nifty or Euro USD or the dollar index or gold, I think it's going to go up or down or whatever. It's not what you think, it's what the charts are telling us a story. Now you can go wrong gravely. I mean, n number of times it has happened with me, but yes, if you're going wrong in an interpretation, that's fine. But if you're holding on to your thoughts as to what you expect from the market, then there will be a problem. All right. Okay, let's get down to the language part now. So the first thing that you do in understanding a language is first of all understand the grammar, right? It's like learning a language. That's as simple as that. It's no complications at all. So what is the grammatical part here? I'm not in a classroom that I can draw and use a pointer, so I'm writing it down. There are basically the structures are let's say where is the candle here? Okay, can you see here three buttons? One is a candlestick button, then the other one is OHLC, open, high, low, close. That's a bar chart. Okay, and that's a line chart. I hope you're seeing it all now. So predominantly there are three types of charts actually. There are candlestick, bar, and the line chart. Line charts are of no use to analyze. Bar chart, yes, it is being used even today, mostly by the Western technical analysts. Candlestick charts developed by were found out by Japanese guys, and that's why it's named Japanese candlestick charts. What I know is this Japanese candlestick chart, and that's what we will be discussing. If you look at the chart here, like whether you have seen a chart before, most of them have definitely seen it by now. But even if you have not seen a chart or you don't know anything about technical analysis, that is even better. All right. So don't worry. We are taking the first step. It might be looking childish for many of them, but as I said, please have faith on me, and things will evolve very fast. So these are like candles. You see candles being formed here. These are candles, the red one, and then every candle is representing a particular time frame. For example, on this chart there is a time frame. You can watch here Euro USD 4 hours. That means every candle that is forming here is formed in, it takes 4 hours for one candle to be produced. If I flip this to an hourly chart, then it will take 1 hour. You will be seeing an hourly chart candle. Predominantly there are 4 points every candle with carry. It is open, low, high, and close. See, you put your mouse over there and see a box on the left hand side which says open, high, low, and close. Those are the 4 points invariably in a candle, which defines what price it was open, closed, and highs and lows when formed, etc. Right now, three types of candles are there. Now the game begins from here. Right. We are simplifying how to read a chart here. There are books available outside just for the Japanese candlestick charts. If you're interested to get that information, you can download as well from net. you'll get a lot of information. But what we will discuss here is only that thing which is important to trade and to make money, all right? Three types of candlesticks are there. One is bullish, the other one is a bearish candle, and the third one is, let's put it in a very simple manner, can't say. All right, I need to spend 5 minutes here now. We need to understand what is, and believe me, all right, I asked you to have faith on me. So there are only three types or three categories of candles. Whosoever you're reading or whatsoever you know about it, or this is a fact. There is no fourth type of candlestick, and if you are finding a fourth one, then there is something wrong. Right, so you need to check yourselves out. Okay, what is a bullish candle then? A bullish candle is, let me take an arrow and try and explain. Let us say this is where the price begins, okay, and this is where the price closes for that particular candle. So you have open, then you have close, and maybe somewhere here a low might have formed, maybe a high might have formed over there. All right, we don't know what would the price, and we're not concerned about the price at all. We're only concerned about what you see. Okay, now what your background is, what you have studied, what you know about financial markets or technical analysis, nothing is going to work. The only thing is which is going to work is what you see. I mean, you need to develop your vision, your eyesight. I mean, not in literary terms of eyesight. You don't need to work on your specs actually, but you need to set your eyes on the charts. That is what is going to make all the difference. All right, what you see is what you're going to do. As simple as that. So let's say that was a high formed and this is a low formed, right? And let's complete this candle as well in a box format. Looks good. Okay. So that is open, low, close and high. So let's understand the story. Every candle, each candlestick has its own story, and you need to understand that. I mean, the more you try and make out with the story form, the more beneficial it's going to be. You're going to love it. And once you start loving anything, it's fun for you, right? So what's the story like? Okay, let's say it's opened the at this price, let's say 1.2019 on the right hand side. Then bears came into picture and they started bringing prices lower. That's what bears would like to do, right? Bears would like to bring prices lower, and bulls would like to bring or to push prices higher. So bears took control, and then they started pushing prices lower up to a certain level. Beyond that, they could not, because bulls said, "Okay, now it's our game, and now we are going to play it out." So they started playing and around, and markets made a new high all the way, making this candle hollow, or a light color, or a green color, or a blue color candle. At a particular high over there, and finally bulls were tired, and they sent the market a bit lower while bears were playing out, and they managed to close at 2140. See the difference here. It was opened at 2019, closed at 2140, and then a certain low and certain high. All right. So if I may ask you a simple question, let's divide this into a few parts actually, right? Now this is something you need to remember. The central body, the central part of the body is known as a candle. Sorry, body. All right. The cylindrical part is known as body. Uh, Both the highs and lows, after forming, they leave wicks behind. So though they are known as wicks, or sometimes many of them call them as shadows as well. Again, the cylindrical portion is body. Then the lower wick and the upper wick, all right, or the lower shadows and the upper shadows, and the entire distance traveled, okay, is between the high and the low. The entire distance traveled is known as the length. So three terms you need to remember. Entire distance between high and low is length, cylindrical part is body, and then the wick part, lower and the higher wick part. All right. Okay, let's continue. What what would you how would you define this candle? Let's put it in a very simple manner. The story. It was open at 2019, closed at 2150. So during the formation of the candle, the maximum part was earned by bulls, right? Maximum time bulls remain in control. So if a price is significantly higher, if a close is significantly higher than the open, then that particular candle is termed as a bullish candle because control lies with the bulls. I would like to repeat. If the close is significantly higher than the open, uh, that particular candle can be defined as a bullish candle because control lied with bulls over there. All right. Please remember the word significantly. Okay, the close is significantly higher than the open. Now, if I may explain what the importance of significance is, just a couple of minutes back. Give me just 3 minutes, and I'll come back to that word. Let us say I draw a candle here, and I just flip the open and close. Let's say this is opening here. And closing there. Alright, again, then the highs and lows, no change at all. How would you define this candle as? It's very simple, right? It would be defined as a bearish candle simply because the close is significantly lower than the open. I'm just putting a shadow here so that you can distinguish between a bullish and a bearish candle. So we've got, I hope now you understand the two categories. One is bullish and the other one is bearish. Let me explain because I am not using a board here. I need to clear something out by myself. Okay, let me ask you a question here. One is bullish, the other one is second category is bearish. I hope you understand this. Should I draw a candle here like this? Difficult online sometimes, but if it was a board, it would have been a wonderful session. Okay, I don't want to confuse you guys now. That is a body. Okay, here in this candle there is no body. How would you define these two candles? If you were to if you wanted to define, there are three categories, right? Bullish, bearish, and can't say. Where would you like to put this these two candles under which category? if may I give you a few seconds time to decide. The first one and the second one, where would you put these two candles, please? There are only three categories: bullish, bearish, and can't say. We have unanimously discussed bullish and the bearish candle as well. In the first candle, there might be confusion if you are very beginning to learn analysis or technical analysis. The second one, if I'm not wrong, many of you would have put this into the bullish category because of the body here. Or you might be asking a question, okay, where is the open and where is the close, so that we can decide. Let's say the open is lower and the close is here. So most of them would like to put it in a bullish category. I hope there's none in the bearish category. I would just like to clarify and confirm that both these candles fall under the category of can't say. They don't come under bullish or bearish category at all. And the very simple explanation to that is as I said, what you see is what you do. Simply focus on what you are seeing here, and the answer will be there. Please remember, I told you significant. If the close is significantly higher than the open, it is a bullish candle. If the close is significantly lower than the open, that's a bearish candle. Here there is no body, so no question about either bullish or bearish. There the body is bullish, but then what is the significant part of the body? It is the VIX part actually. How do you define significant part of the body? You know the parts of the body now. That is the central part is body, and the lower VIX and the upper VIX and the length. So whenever you put your eyes on a candle and the part that is significantly visible for that particular candle makes it a bullish or a bearish candle or an indecisive candle, right? If the part that is significantly seen on a particular candle is body, all right, if you look at this body, which part comes to your eyes first? Obviously the significant part is body, so that will come to your eyes first. Here the significant part is a body, so that will come to your eyes first. That simplifies matter. If the significant part that you see is body, it is either going to be a bullish or a bearish body. And if the significant part of the candle is anything other than the body, it could be wicks, it could be an upper wick, or it could be lower wick, or it could be both the wicks, then it has to be, now there is no logic or question or understanding required from your side. Don't try to be creative here. It has to be fallen under the can't say or indecision category. Do you understand? Again, I repeat, I'm trying to explain this in a very simple manner. None of this is my creation. It's what I've learned over the years. But this is the simplest form of understanding the chart categories. There are only three types of candles: bullish, bearish, and can't say. Alright, if you still have any doubts, you may write to me and I'll try to clarify and give an explanation. Okay, but I think we've done it in a very clear language to make understand what is bullish, bearish, and can't say. Alright. I want you to do some exercise here. Just it will take 1 minute, not more than that. Run your eyes through every candle here, starting with this one, November 21st, 2017, and see if you can make it fall under a bullish, bearish, or a can't say category. Let's do it together quickly. This one, indecision or can't say. Next one, bullish. Here blue is bullish, red is bearish, and the rest is can't say. Can't say, can't say, bullish, can't say, bullish, bullish, bearish, bullish, cannot say, bullish, can't say, bullish, can't say, can't say, can't say, or indecisive, bullish, bullish, indecisive, indecisive, bearish, indecisive, 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 indecisive again, like that. Is that okay? All right. Now you must be wondering what are we talking about when we're discussing technical analysis. I mean, nothing of technical analysis has been discussed here. It's going to take time, as I said. Please have faith for a few hours on me. I'm trying to build up a base for you so that it stays with you for life. And believe it or not, from each session we are going to go very fast. Each session story as it unfolds, you're going to love it. All right. So one thing is clear: bullish, bearish, and can't say. All right. Let's move a step further now. I need to go on the back side. Having known what the candlestick categories are, we will now discuss what would happen on the chart that would say that, all right, I'm most probably now. Please remember, we are playing or always trying to play game of probabilities here. I repeat, sir, we are playing games of probabilities here. All right, higher the probability, we try to go and trade in that direction. There is always going to be some risk behind us, and that is our stop loss. We will discuss this as and when it unfolds. So, what would be seen on the chart will say that it's a high probability for the market to go up, and what would you do? And then buy. The other side, what would you do is sell. So what we are precisely looking for is buy and sell signals for ourselves or for our clients, right? So how do you find buy and sell signals, and how many of them there are actually? Honestly, there are 7 trading signals which personally I know. There might be more, but what I know is around 7 trade signals which help you decide, take a buy call or a sell call. All right. There are 3 types. Number 1, to buy. Now let's discuss the buy side first. One is a morning star, and then there is a tweezer bottom. I cannot draw these patterns, but I am very sure that you might have downloaded the PDF that I sent across on the Telegram earlier. There are diagrams for these candles. You can please go through them, and if you have any difficulties or you don't have that, you cannot find that PDF, just send an email and I'll put it there again, okay? But I'm very sure the PDF is there. You'll find it on the Telegram channel. If you haven't yet subscribed to the Telegram channel, you should be looking to do so, because it's all free, complimentary, and informatory. All right, there's nothing that you're going to lose there. Morning star, tweezer bottom, and engulfing bullish. All right, and on the sell side, you have an evening star, exactly opposite to a morning star, tweezer top, and engulfing bearish. And then the 7th pattern is a pin bar. I'll show you what is a pin bar. It's a partial tweezer top, tweezer bottom candle. I'll try and run you guys through what is a morning star and evening star over here. A morning star is a pattern which produces a bearish candle first, and then there is an indecision or can't say pattern, at least one, and followed by a bullish candle. I'm trying to find out. This is a morning star, exactly where I placed my arrow mark here. That is a morning star, a bearish candle followed by an indecisive, and then a bullish candle, right? That is a morning star. Then I need to pick up an arrow here so that we can go through the patterns, some of the patterns here. I might not. This is a morning star again, not exactly a bearish candle, but hypothetically we can trade this candle. That is an engulfing bearish. Engulfing bearish is a complete bearish candle overlaps your previous bullish candle. That's an engulfing bearish, a signal to sell. But we are still immature to go and trade. Okay, so just seeing a bearish candle, don't go and sell. Just seeing a morning star, don't go and buy. There are various factors involved as to where this candle is going to appear, at what price, at what level you should take action. Okay, so please have patience for a few more hours, otherwise it's going to be some problem. Engulfing bullish here, a bullish candle engulfs a bearish candle. Then tweezer top, two candlesticks back to back where the significant part is the upper wick. Two candles back to back where the significant part is the upper wick. Tweezer top. Exactly opposite, two candlestick patterns, two candlesticks back to back where the significant part is the lower wick. This is a tweezer bottom. And then an evening star. Let me try and find out an evening star. There is tweezer bottom. You see that? Tweezer top, sorry. And then an evening star. Let me find out an evening star. This is an evening star. Bullish candle or indecisive. Then you can merge those two bearish candles, and that becomes an evening star. Right? Just see to it that the body of the bullish candles and the bearish candle, the bearish candle should at least be more than 50% of the bullish body in size. And in the morning star, it should be at least more than 50% than the bearish body, right? Alright, so pin bar, let me find out a pin bar for you now. The sessions might go exactly for about 40-45 minutes, not more than that. That is a pin bar. A pin bar is a candle which is a 50% of a tweezer top or tweezer bottom. It gives you a good indication as to where the next probable move could be. If the wick is on the upper side, on the north side, then markets are likely to probably fall down or drop lower. And if the like what you see here, if the this is a pin bar again, and the wick is on the south side, then you might be seeing a probable move on the north side. All right. I repeat, just by having understanding of the signals, please don't go out and trade immediately starting markets tomorrow. We are still wanting to discuss finding out support resistance stories and the trend stories and the Fibonacci stories, and at least these three stories. Let these three stories be delivered, and then you might have a case to go out and trade on yourselves. I promise you one thing, it's whatever I know, I will deliver exactly as in the live rooms here. All right. Then you just simply need to practice and practice over and over and over and again, so that it gets into your subconscious mind, and then you won't even sometimes know what you're doing, and the subconscious mind will take over all your trading activities, and that's the best part. All right. But initially, there you have to have your conscious mind working on it, and need to follow bit rules, nothing else. All right. Bit steps, nothing else. All right, so let's bring this session to a pause here. We've discussed 7 trade signals precisely by the end of this session. 3 signals to buy, 3 signals to sell, and 1 pin bar where we will be mostly taking trading actions, or where you can take a trading actions. Like for example, that was a morning star on a 4-hour chart, which bought back euro to a next significant level here, right? That was again a morning star, a bearish, a 2 indecisive candle, and a bullish candle, right? So candlestick patterns are really very helpful, uh, and most of the traders, most of the or best of the traders, they do make help use of these candlestick patterns as well. I hope. Let's bring this session to a pause now. The first story. We will go into the next story tomorrow, 9 a.m. Eastern Standard, with the same format. That the next step will be understanding the game of supports and resistance. And if you're not there live, you might be watching it in a recorded version. Whatever it is, do not forget to subscribe. I'm finding out ways to communicate directly through the subscriptions that are coming in whenever I want to make a declaration or whatever. All right, so don't forget to subscribe, and if you are liking it, you may want to press the like button, and most importantly, help me spread the word, brothers and sisters. All right. So let's bring this session to a pause now, and I'll be back tomorrow as usual for all the live sessions, and uh, we've added one more session in our daily routine, is that the education session at 9 a.m. Eastern Standard, Monday through Friday, right after the New York Live. All right. So until the next session, please take care and God bless, and thank you again if you are here joining me live or watching this video in an offline mode. Goodbye.